The US dollar continues to hold its recent gains as the markets gear up for November's Nonfarm Payrolls report. After an unclear rise of 12,000 in October, this report is expected to not only bring US job data back to high levels, but also set the tone for the labor market in 2024. Moreover, this will be the last non-farm payroll report in 2024, making it crucial for assessing the Fed Reserve's rate outlook. As a result, markets are paying close attention to all interim data related to US employment. On Thursday, December 5, two such reports will be released. Let us explore how this and other macroeconomic statistics might affect Forex trading. You're watching Traders Calendar. On December 5, Australia will release reports on its trade balance. The surplus is expected to remain positive, but the gap between imports and exports is likely to continue narrowing. The October figure is also expected to fall compared to previous reports, decreasing from 4.6 billion to 4.5 billion Australian dollars. This decline is likely to weigh on the Australian dollar. In Europe, currencies are likely to face pressure from reports on orders and construction activity. Germany's economy continues to show weakness, with the factory orders expected to fall from 4.2% to -2% year-over-year. Such a decline could weigh heavily on the euro. The euro's decline might be tempered by an uptick in construction PMIs in both Germany and the Eurozone. In the Eurozone, the construction PMI may climb from 43 points to 43.5 points. However, the figure remains below the critical 50-point threshold, highlighting the construction sector's gradual decline. The situation echoes concerns seen in the Chinese construction market. By contrast, the UK's construction PMI continues to signal expansion above the neutral 50-point mark, holding steady for 8 months. Judging by the forecast in November, the indicator will remain about this threshold. Nevertheless, the pound sterling is likely to show a negative reaction, as the business activity may shrink by 0.7 points compared to October. Later in the day, Eurozone retail sales data for October is expected to show slower growth, declining from 2.9% to 2.5%, and this could act as a bearish factor for the euro. Notably, a decline in the euro may accelerate at the beginning of the US trading session. The United States is going to disclose two macroeconomic reports, and the first one will be provided by Challenger, Gray, and Christmas, reporting a likely decline in announced job cuts from 55,000 to 49,000 in November. This signals is a robust labor market, likely strengthening the US dollar. While the US dollar may react strongly to labor market data, Canada's trade balance could provide support to the Canadian dollar, as rising exports are expected to reach 64,300,000,000 Canadian dollars. What's more, the rise in the Canadian dollar could be supported by the manufacturing PMI data. Thus, the indicator is expected to climb by more than 2 points to 53.1 points. Meanwhile, the greenback may lose value amid the publication of initial jobless claims data. Initially, the report was defined as of secondary importance. However, the situation has changed. That's why the anticipated rise may exert pressure on the US dollar and cause a short-lived drop. OPEC and 11 major oil producers will hold a meeting on December 5 to discuss market strategies, including a potential increase in oil production. Any unexpected outcomes could significantly impact oil prices in the long term. Also, this day, officials of the central banks of Japan, the United Kingdom, the Eurozone, and the United States will provide speeches. And these statements may trigger heightened volatility in the yen, euro, and the pound sterling against the US dollar. Please note that the time of the publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on a Thursday, December 5. We wish you profitable trading and see you soon.